I found 3 stocks below $10 whose dividend yields are higher than 10%. One of these stocks even has a dividend yield over 20%. Whether you're a beginning investor or just have less cash available, these 3 stocks could make a great addition to your portfolio. If you're just getting started in your pursuit of cash flow through stocks, consider the Webull app. You can get up to 12 free stocks just by using the link in the description below to sign up and fund your account with any amount. The first stock on this list today is Oaktree Specialty Lending Corporation, ticker symbol OSCL. They're a specialty finance company that provides customized, one-stop credit solutions to companies with limited access to public or syndicated capital markets. The company provides flexible financing solutions, including first and second lien loans, unsecured and mezzanine loans, bonds, preferred equity, and certain co-equity investments. The company acts as a business development company and serves various industries, including application software, multi-sector holdings, data processing and outsourced services, pharmaceuticals, biotech, healthcare services, specialized finance, personal products, property and casualty insurance, industrial machinery, internet and direct marketing retail, construction, and engineering. The company's investment advisor is Oaktree Capital Management Limited Partnership. As of November 18, 2022, their dividend yield sits at 10.08% paid quarterly with a share price of $7.14. Oaktree has consistently maintained or grown their dividends since Q1 of 2018, including during the early 2020 crash. As you can see on this chart, the price has performed relatively well over the years, especially since recovering from 2020. Next on this list is Sachem Capital, ticker symbol SACH. They're a real estate finance company that specializes in originating, underwriting, funding, servicing, and managing a portfolio of short-term loans secured by first mortgage liens on real property located primarily in the northeastern United States and Florida. The company's lending programs fix and flip loans, real estate loans, bridge loans, new construction loans, and distress/foreclosure loans. The company's primary objective is to grow its loan portfolio while protecting and preserving capital in a manner that provides for attractive, risk-adjusted returns to shareholders over the long term through dividends. The company intends to achieve the objective by continuing to focus on selectively originating, managing, and servicing a portfolio of mortgage real estate loans designed to generate risk-adjusted returns across a variety of market conditions and economic cycles. As of closing on November 18, 2022, their dividend yield sits at 13.68%, paid quarterly at a share price of $3.80, making this a penny stock. With the exception of a 6-month period in 2020, dividends on this stock seem to have been relatively stable, aside from what appears to be the occasional supplemental dividend or unsustainable attempts to grow the dividend, followed by a return to a more consistent payout after. The share price doesn't seem to fluctuate much either, aside from early 2020, so this could be a relatively stable option for your portfolio. However, it's important to keep in mind the price may dip further due to real estate continuing to drop in value. It may make more sense to wait longer and average in near what you believe to be at a bottom so you can get a better percentage yield on your dividends. The last stock on this list is a closed-end fund that seeks to provide long-term capital appreciation through investment in equity securities of small and medium-sized companies located throughout the world. As of November 18, 2022, their dividend yield sits at a whopping 26.33%, paid monthly at a share price of $8.24. The name of this fund is Cornerstone Strategic Value, ticker symbol CLM. So while Clem's current dividend yield is very high in relation to its share price, they did just announce the dividend would drop from the current 18 cents per share per month to just 12 cents beginning in 2023. Seeking Alpha only shows Q1 2023 with the new dividend, so it's not yet clear whether the new dividend payout will remain the same throughout the year. That said, the new dividend yield in relation to the share price on November 18th would still be 17.47%. If you also factor in the 2.01% expense ratio, the net dividend yield still sits at 15.46%, which beats the other stocks mentioned in today's video. So for the moment, this isn't a bad dividend stock to hold. Judging by their previous track record, I feel okay holding it for maybe the next year. However, I will be keeping an eye on the share price and the dividends in the near future to ensure that it is a good hold going forward. If you enjoyed this video, you might also like the one here on the screen. Don't forget to subscribe and hit the bell to be notified so you don't miss a single video. And as always, make sure you do your own research before investing into anything, as investing is risky and this is not professional financial advice.